Welcome to my live market meeting 25 June 2020. Before I begin, let me check. Are you able to hear me and see my screen? Please drop a note on the YouTube live chat if you can see my screen and hear me. Thank you. Let me begin. I am Sagar Nandi. I am retired IT professional. I work mostly in Singapore, but nowadays I am living in Thailand, swing trading stocks using the Q systems and techniques. This is my email ID. You may contact me here. My YouTube channel for trading related videos, my Twitter handle, and Traders Forum, where I regularly share market and stock analysis using live systems. All these are open to the public and you are most welcome to make use of them. Disclaimer, I am not an investment advisor. This demonstration is for educational purposes only. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. This is a live market analysis. I have not prepared for it. I'm going to use the live technical analysis systems. I will use Q Elite on TradeStation and Q Global Q Finder, not there, on Metastock. That is for technical analysis. For fundamental analysis, I will use Vital, Sector Industry Rotation Analysis Q Edge, and Index Analysis. I use Q Index. That was the last slide of my presentation. I'll now continue with the live system. Once announcement before I begin. I noticed today that there is some error coming in Q Edge. That error is that if you choose the country as United States of America, most of us are trading in the USA market. That is our default choice for country. But if you selected that, it was giving some error today. And I investigated. The error was on the Refinitiv side, not on our side, on Q side. So I contacted Metastock. They have reproduced the issue and they have contacted Refinitiv. It may take a while for them to resolve it because multiple parties are involved here. As soon as I get a permanent fix, I will notify again. I had emailed earlier today about the notification through email to all the forum subscribers, and I mentioned I have also provided one workaround. That is, instead of choosing United States of America, if you choose custom, it will show the same data as if it is for United States of America. I just bypassed some of the function calls that I was making to Refinitiv to get some data and used workaround instead. As you can see, I am running Q Edge in real time now for USA market using the country as custom, not as United States of America. That was the announcement. If you are not having any issue with Q Edge, then it is fine. You may continue to use the version that you have. If not, you may follow the link I provided in the email notification. If you didn't receive the email, you may go to the download install category on my site sagarnandi.com, then go to Q download. Then as usual, you can follow through to the Dropbox link to download the workaround for Q Edge. That was an important announcement. I tend to trade always with Q Edge running. So if it is not running, I feel uncomfortable knowing what is going on. So I had to work very fast today to create the workaround for all of you and for myself. Because we are on Q Edge, let us look at Q Edge first. This is 2:30 p.m. Eastern Standard Time, around that. We see that 3 sectors are up, 8 are down. So overall it is bearish today, shown by the purple bars. 73% of the sectors are down, 57% of the industries, and 54% of the stocks, that is S&P 1500 stocks, are down. We can see it is more or less balanced, slightly on the bearish side, but more or less balanced. That is a big change from yesterday. I had tweeted about yesterday's market breadth seen from QH. Let's look at the tweet post. This is what I shared yesterday around 11 a.m. Eastern Standard Time. And see the QH summary yesterday. All the sectors were down. 99% of the industries were down and 96% of stocks were down. The market doesn't get more bearish than that. In fact, soon after I tweeted about it, this percentage became 100%. Only gold mining was up as of the time I shared it, 10:55 a.m. yesterday. Soon after that, even gold mining was down. Compared to that, today is better. We can see from Q Edge live charts. However, if you are keeping Q Edge on your computer in real time, as I do, you would have noticed that the market tried to do better earlier. Let's look at the other screen that I keep always running on one of my monitors. That is a view of the 4 market ETFs: IWM, DIA, QQQ, and SPY using Q fine-tune chart or Q zigzag chart. You might have noticed in Q Elite now there is a study group called Q zigzag. Q zigzag. If you apply that, then whatever is there on fine-tune intraday chart, that will come, plus it will also draw these zigzag lines. This is Q version of zigzag line. They don't have delay. The traditional zigzag line that you find in the market, they have delay, but the zigzag lines designed by Q developer, myself, it doesn't have delay. Because fine tunes is meant for precision entry, it is better if we don't have delays. And overall, this template is designed for day trading or for precision entry, and that's the fine-tuned template, and it doesn't include delayed indicators or much delayed indicators. For swing trading, I use at a glance template. Those indicators may have some delay, and that delay is beneficial for swing trading but not beneficial for intraday trading. In fact, I was looking at these 4 market ETFs and I noticed that though QQQ opened relatively lower, it sharply recovered here. And I was looking at it using the 5-minute chart. Let me switch to Q 5-minute chart and change the symbol to IWM. I am going to explain how you can use the fine-tune chart to make profitable day trades or precision entry of swing trades. Yesterday we saw IWM was the weakest. So I was happy to consider taking a short trade in IWM using fine-tune chart. It shoot up here and the candle color turned green. And you can see I'm using 5-minute chart now in the morning session. That is my standard interval for fine-tune chart. Then I saw it came to the pause line, made a candle with a long upper tail, and the next candle initially turned yellow, and by the time it closed it turned red. If the change is gradual, like is here, gradual means normal. If the change in direction is normal, at normal pace, then you will see the traffic light candle color first turns from green to yellow, then to red. And in this case here it turned directly to red, but I was watching it. I could see it going through yellow and then to red, and I shorted IWM right at this point. I am not a day trader, so I took a very small position. It was just because I was in front of the terminal. It was not for making a profit or so, not much profit anyway. So I took a short position on IWM, and my stop was just above the day's high. And once the risk distance was covered, I exited half of the position and I left the rest at slightly better than break even. And I was stopped out along the way. I was not tracking it. Once I booked my partial position and I put my stop on the remaining position at slightly better than break even, I didn't track it. I was watching Netflix. I was watching this series, Blacklist, about Russian spies working with FBIs. Anyway, I don't need to track a day trade once I book partial profit and I have a trailing stop in a way that the entire trade is risk free. Now in this case, I happen to exit half of my position, but that is why did I exit half of my position? Why I am asking that question? My standard practice is to exit 2/3 of the position. Why? Because if I exit 2/3 of the position, if I exit 2/3 of the position here, then I could leave my stop at original stop for the 1/3. I didn't have to move my stop to better than break even or break even. But if I exit half of my position, I have to move my stop to break even. If I exited 2/3 here, then I could leave my stop at the original stop loss, and even if the original stop loss was hit, I would still have some profit in the trade. In this case, I didn't exit 2/3, I exited half position. That's why I had to move my stop to break even. But exiting 2/3 is my standard practice for swing trading. As I said, I didn't take this trade to make a large profit. It was just because I was in front of my computer, and I do have a number of bearish trades already open. Those are swing trades. I hope to make some money. They are all in profit now. So that was one reason you could say that I exited half position. But you can also see the value of exiting 2/3. If I exited 2/3 here and I put my original stop, left my original stop, I am still in the trade. I would not get stopped out easily. If you apply this technique of exiting 2/3 and leaving 1/3 at original stop, you will see for swing trading as well as for day trading, it tends to work out better over a large number of trades. Why did I come here? I wanted to come here to show that you can use the fine-tuned chart to precisely enter a trade whose direction you were already aware of. You already wanted to take only short trade. At least I wanted to take only short trades in IW. Is the market very bearish? No. In the last market roundup, weekend market roundup, I analyzed the market to be neutral. I think I am still holding the view because now I am looking at the at a glance template. Let's see why. The weekly is yellow. So far it has a small body. It's Thursday already. The body is very small, not very decisive, not bullish, certainly not bullish because it has an upper tail, but not that bearish also. And the real reason, I can say not only real, more important reason is because it is very close to a memory support line, IWM. So I cannot be bearish on IWM. In fact, if you are watching the market, you would have noticed if you look at E-mini futures. This is E-mini futures. Even in the overnight market, before the market open, it tried to hit this memory support line, daily memory support line, precisely reversed from there. That was in the overnight market. And even during the day also, it tried to come down. Let's look at SPY now. This is SPY also having a memory support. And if we look at the intraday chart, it tried to come down after market open, but it recovered. These memory supports work remarkably well because IWM is above memory support. SPY yesterday closed at memory support. Today, so far, it may be slightly below, but we have to see where it is closing. Let's look at DIA. Yesterday at memory support. Today, so far, it is slightly below memory support. We'll have to see where it is closing. And QQQ, which was the strongest, it had a bearish headwind yesterday. I mentioned about that in my tweet. The weekly shape is bearish, but overall we have to say it is in an uptrend and multiple memory support lines. That is why I am not bearish on the market. I am not thinking it is the best time to buy stocks, but I am not bearish on the market. Why I took short trades? Because I thought it would be easier to profit from short trades. One reason of that was because only one of the market ETFs, QQQ, was at extreme thrust and jump even in the weekly chart. And every time that happens, the way the thrust and jump indicators in Q systems are designed, once they reach the extreme in weekly for both of them, it's likely that it will come down a little bit. Now I am not going to short QQQ because it is the strongest. That is why I shorted some other stocks. Which stock could you think of shorting? Let's look at a few stocks. Let's look at this. Let's open it using Q Global on MetaStock. Let's look at this stock, WGO, the recreation vehicle maker or seller, and I want to point out few things. When these stocks go up so rapidly, I keep an eye on them. And in this case, you could have made some profit, significant profit, if you kept an eye on the bullish headwind at this point in the weekly chart. And also, after the initial COVID related sharp drop, if you kept an eye on the very long-term weekly memory support line, you could buy the stock at the bounce point. Maybe you could use some of that profit to buy one of the recreation vehicles from Winnebago, or I don't know if I can pronounce it correctly, but WGO. Now, what happened in the daily chart? It displayed a bearish headwind few days ago. However, the candle shape was indecisive. Therefore, there was no short trend. If anybody had a long position following Q guideline, he or she would be cautious. Now you can see yesterday it had a drop and the candle color became magenta, flow color magenta, had a sharp drop. If there was a memory support line that was broken yesterday. Past memory support lines are not available in Q Global. They are removed once they are broken, but let's check it out from Q Elite, WGO. You can see that yesterday it broke the memory support, so it gave a breakout short setup. What happened yesterday? Why did it gap down? The market was weak, but that was not the only reason. It announced earnings and then it gapped down. However, it announced positive earnings and then it gapped down. That is not very bullish. Now it is below the memory support lines. If it continues to go down from here, you might consider shorting. And here also, like in QQQ, you can see it doesn't happen in many stocks. Always very rare, quite rare, especially when we are talking about weekly interval and jump and thrust both being red color, the dots in red. That doesn't happen often. For example, here only the jump was red, thrust was not red. Jump is how far it has moved here, and thrust is how fast it has gone there. So when it was so extended, it was likely that it would drop, and that happened. You could get ready by looking at the thrust and jump. Now, if you looked at WGO, you might have also looked at the peer stock Thor, THO, Thor Industries, and see what happened in Thor Industries. It had a sharp move up from the bottom. At the lowest point, you could start to think of buying the stock once it created the false downside breakout. The actual entry could be using the daily chart. In the daily, it gave a bullish headwind. You might not have taken the bullish headwind signal, but you could quite confidently buy using this bullish flow candle, putting stop just below the recent low, and you could book partial position. That's what I do when the initial profit target is hit, and you could continue to hold the remaining position happily. But that was then. What happened recently is it displayed a bearish headwind. From that point, you could start to be cautious. Let's check out its jump and thrust indicators. Here also the thrust and jump both became red at the extreme. Now I also tracked how the stock moved during earnings. Thor Industries earnings was over some days ago. This was the gap down related to Thor's earnings. So it gapped up, but after earnings it gapped down. It recovered that drop, displayed a bearish headwind, then a bear release signal. The candle traffic light color turned from bullish to neutral. Yesterday it turned red. So from weekly extreme thrust to bearish headwind in daily and the move around earnings. That is also some useful information that it dropped after earnings, tried to recover, probably sucked many late buyers at the top, displayed the bearish headwind, dropped yesterday, and the traffic light candle color turned red yesterday. Was there a breakout yesterday? Let's check out from the Q Elite charts, THO. And some of the memories may be broken already. Let me switch to the template that shows the past memory trend lines. Yes, there was a memory trend line here that was broken either on the yellow candle or the red candle. Yesterday I took a short trade in Thor, and you can see how I could track not only Thor but its peer stock WGO. I could see how the stocks are moving around earnings and make an informed decision based on the thrust, the jump, the traffic light change, the drops associated with earnings, breaking up memory trend line, traffic light color change. Everything I combined together and I could take a short trade. I used a options vertical position for that. Now before that, of course, I checked their fundamentals. Let's look at that. And what I am now describing is a technique to short at the very top. If you are following me on my Traders Forum or Twitter page, you know I looks like, appears to be quite good at that, shorting the top or buying the bottom. And I do buy trend following trades also, long short, both. I take them also, but I am quite good, I think, at catching the top bottom. And this is what I did with Thor. So far it is in a profit. The valuation is in the middle and the earnings is negative and reducing. That gave me enough reason to short the stock. I didn't short WGO. They are in the same, very similar industry, same industry, so I didn't want to do that. Let's check out their industry by clicking the cog icon. That will take me from Q Vital to Q Edge and the industry. Instantly we can see it is weak today, and yesterday when I was doing the analysis it was also looking weak. It was showing some deceleration. So that was my 360 degrees short trade yesterday. That was only one. In the forum I shared several trade ideas. Recently, all of them had been on the short side, and quite a few days before everybody noticed that the market was dropping. Market is again not bearish, but it is little bit, not even much, little bit coming down from the top. But when the market comes little bit down from the top, individual stocks drop much more. I talked about a few home builders. I don't remember, it might be in the forum or it might be in the earlier videos. Let's look at them. I talked about two stocks, Lennar and LGI Homes. This is Lennar, Len. Again, I could short somewhere here using the memory resistance and the price coming down from there, and I was aware of the memory support below. So I shorted it at the top. When it is in a range, the best time to short is at the edge, top edge, or best time to buy is at the bottom edge. In this case, I could short at the top edge. I took a put option, simple put option. Why did I take a simple put option in this case? I could of course short the stock, but I thought that if the market comes down more than others were hoping for, the puts would make a large number of profit. And another reason I used Lennar simple put option was its volatility or price for the options. In Q Elite, we can see the volatility chart based on options pricing. There is a volatility template, studies, add study group, Q volatility, Q volatility. If you apply that, then it will show the candle chart. It will show the Q squeeze, not the standard squeeze, but Q squeeze, very visual. And it will show the option volatility as a color of the candles in the volatility template. When the candle colors are cyan, it's not that the stock price is high, it is that the options are very expensive. And when I shorted it here, that time option price was very low, implied volatility was very low. That's why I took a simple put option. Now what happened yesterday? It came to the memory support line and I closed my simple put option. Then I took a short call vertical and then I switched to intraday chart. Let's now look at the intraday chart. Yesterday I took a short call vertical, so that was in a profit. Then price recovered somewhat and I was watching it. It again came to precisely the early range low, gave the bear release signal. Bear release signal at this point, it closed decisively below the early range low. So if I was shorting the stock as a day trader, which I am not, I could short it at that point and put stop here for very narrow stop. If I was shorting the stock in the beginning of the day, then my shorting point would be here. When it broke below early range low, my stop would be here. Then it came down, it gave me much more than the risk distance as profit. That was for day trading. If somebody missed that, the next opportunity came when it came to one of the Q pivot levels. When price comes up like that and starts to go down, that what I call is a no man's land for day trading purpose. It has to come to a major pivot level. I might have moved that line. Let me draw it again and switch to 5-minute chart. I'm using hotkeys. So this is a no man's land for day trading purpose. This is a no man's land. But when it comes to a major pivot, these pivot lines drawn on Q fine tune chart, and then it has to display the bear release signal, in this case bear release signal, and the traffic light has to be not green when I'm shorting, which was true at one of those point, these candles, yellow candles, and the candle shape has to be bearish. So I could short right at this point. And here I again took another put option. So now I am holding a short call vertical and a put option, but the put option that I am holding now and that one that I booked profit on, they are very different. Let's look at the chart again, the daily chart. When I initially took up the put option, the price was here. So that was around 62. So I might have taken 63 put. And when I initiated the new put, then price was around 58, 59. I might have taken a slightly out of the money options in this case, and I am using my profit in the initial put position to open the next trade, and the short call vertical is okay because time decay is in my favor. So in effect, that is also what Dr. Jeffrey uses as a synthetic position. I legged in into the trade and I have pretty high delta in the trade. So that is another bearish position I am holding. I can see as of today it is below the memory support. That is good for me. Though the candle shape is still mixed, it has a hollow body, but it is below the memory support. And this movement is very common. Once a stock comes below the memory support, it may try to go up to that exact memory support and drop again. It may happen across a few days or on the same day, kind of dead cat bounce. So I am okay with that. I already have some profit in the trade. Let's look at its fundamentals. Lenar. By the way, after I took the short trade, I think some housing data came out. I keep an eye on the news, but I don't trade on it. I shorted before the housing data came out, and the housing data, if I remember correctly, was pretty bad. But anyway, I didn't trade based on that. I keep an eye, but I never am influenced by the news. I rely on the 360 degrees technique. You can see this is Lenar's vital scorecard. Today, home building is very weak, much weaker than the market. We saw from QH about 60% stocks are down. For Lenar's peers, 91% of the peer stocks are down, 22 peer stocks in home building. Valuation in the middle, earnings growth still positive but coming down. That is good enough reason for me to short. The stock is steadily falling. That was not the only home building stock that I shared earlier. The other one was LGI Homes, LGIH. Similar pattern, and I mentioned during the analysis that LGI Home had a closer by memory support line at that time. Let's look at the memory support through QLA, LGIH. Now it is below the memory support. There is no memory support nearby. How did I short it? I used some of the bearish headwind, etc. But the point when I shorted it, I think around here, because it came down after bearish headwind signal, retested it and started to come down. But I noticed there was a memory support closer than it was in planar. But I still shorted it. In this case, I used again options vertical. Don't remember if I used short call or long put, but I use simple vertical. And as you can see, I am quite happy now. Now it has decisively broken below the memory support line. Again, a trade where I could short the very top, isn't it? Very top. And I was keeping an eye on the weekly chart also. Here also it created a double top. Let's look at its fundamentals. LGI Homes must be in here. So I can go to the fundamental scorecard and highlight the row. Overvalued stock. The earnings growth is there. The stock is overvalued. That is good enough reason for me to short the stock. even now it is only 9.8% below 52-week high, and I shorted it several days ago. It has come down over last few days, so I could pick almost the very top. Seems to be doing quite well, my Q systems. So those are few bearish trades. I am making profit from the swing trades. That is why for the day trade on IWM, I was not that particular. It's just a trade I took and booked profit quickly, put trailing stop on the remaining position. Now let's look at Q Finder, bearish. Where did I find Thor or WGO from? Let's see. W. Oh, this is 24th June. Let's see. Breakout. I'm looking at Q Finder, the bearish tab. I have all the bearish stocks. Let's look at the bearish breakouts, and let me search for WGO. Options, values, find next. This is Winnebago. Yesterday it came in Q Finder. That is how I located it, and I am fond of shorting the top. They give immense profit relative to shorting in the middle, or certainly not shorting the bottom. And the price extreme column shows where I am. Whenever I see a breakout at the top, or headwind at the top, or even go through at the top, box at the top, I'm more keen to take it as a short trade. So this green color alerted me. There were many breakouts yesterday. You can see 459. Why my both eyes came to Winnebago first was because it was at price extreme high. And yesterday it not only gave the breakout short signal, it gave a high bearish pressure. It had a gap down open, breakout setup, and bearish flow, and a possible box short setup. And then I conducted a peer analysis on WGO and found Thor. Was Thor here yesterday? No, no. So I found it from peer analysis. Why I shorted Thor instead of Winnebago is because Winnebago just had earnings, and I didn't want to short or go long either way, just on the earnings day. And for Thor, earnings was over, it tried to go up again and failed, so that was the sweet spot to short it. So the Q Vital is very useful. I could Q Finder is very useful. I could run Q Finder. It may take a while. I will spend the time while it is running Q Finder to look at. Let's look at Q Sonar. I don't use it all the time because I tend to search trade candidates from 1000+ stocks on my computer. I cannot load 1000+ stocks on Q Elite, but I can load 100 or 200 stocks. So I have a list of stocks with liquid options. Let's load them on Q Elite. Let's see how long it takes. While it is doing that, why don't I carry out a top-down analysis? Go back to home. Now we can see again the market is remaining. Now you see, when we started it was slightly more bearish than bullish, and now it is slightly more bullish than bearish. Very mixed market. What we could do is look for trade setups from Q Insight. Q Insight, I click the battery icon. I'm not overloading the system by clicking the calculator button. That will try to calculate all the best worst performing. I don't need that now. These are the best performing value stocks today. Let's open them up. I move this to another monitor, go to chart application and come back to Q Edge. Select all the stocks and click the chart button. That will open the 10 stocks using the Q entry daily chart. Though I am looking for bullish trades, I think the market is mixed. It may be safer not to take any long or short trade right now. I entered the short trades earlier. I didn't take any new short trade today other than the IWM day trade. This is ICHR, certainly a value stock because it came in Q inside, but it is inside a triangle pattern, not a place to buy. When it is inside a range, the best time to buy is at the lower point, but it didn't give us a buying opportunity because this candle itself was red color. Now if it comes to the memory resistance, comes down, candle color changes and we have a bearish signal, that may give a shorting opportunity. But today I'm looking at it from a bullish perspective. There is no trade because it is inside a triangle pattern. I'm using Control Tab hotkeys to shift through the stocks. This is looking better because the memory resistance is far away. This is KRA, but not very clear trend. Why I am saying that? Because I am seeing came down, made a lower high and came down again. If it goes up, it may create a W pattern. That may be a buying opportunity, but not giving that much confidence to me. RGNX has memory resistance here, so I'm not going to buy it now. VAR2, VRTU, no clear trend. It is inside a range, is breaking memory resistance, but not with very high activity also, so I'm not considering buying it right now. No bullish pressure as well. This is also similar to the stock I saw earlier. The trend is not clearly bullish, lower high, so I'm not going to buy it now. EXPR, there is a memory resistance nearby. I'm not going to buy it now. FHN. In fact, this is looking better than the others. Why? Because I try to buy stocks at a support and memory supports work quite well. It has a bull release signal. It is looking better than the others to my eyes. Stop is very nearby, but again, it has a, you can say it has a lower high here. But I will keep this in mind. FHN, later on I may look it up through Vital and Edge. Let me note it down on my sticky note. CEIX, it is very much at the bottom, not giving enough confidence to buy. GMS, memory resistance nearby, memory support nearby, not a place to buy the stock. PDCO, already up close to the upper boundary. I try to buy at the lower point of the swing, not when it is reaching the previous high. That is my profit booking point, so I'm not going to buy it now. Back to ICHR. So we didn't find any stock, and that is what happens when the market is not very clear. So we wanted to look at FHN. So let me close everything and open just FHN, and I could open it using QLit. FHN. And let me change the template. I removed the old memory lines. Now if you look at this memory line, this is a support line. The fact that it is above price is of no significance. The green lines are support, not resistance. Because of some mathematics, it is still there. It should be removed soon in a day or two. So we have a support. The weekly is very indecisive. In this market, I am not going to buy, but if I buy, this may be the best opportunity. But when the real best opportunity was there, it was when both jump and thrust became extreme. It showed the red dots and then started to move sideways. Since then, you could switch to daily chart. This was, let's see, this was March, end of March. So from around this point, you could start to look for bullish setups. Now there is no clear bullish trend from the list that we looked at. Let's now look at Q sonar. Let's see if we can find something from there, and let's try to look for bearish trends. Let's try to look for headwind. No, because today market is turning bullish now. What about box? No, go with flow. There are number of possible go with flow short setups. Let's look at Q edge one more time now. It is turning more bullish. Okay, I always keep that picture in mind. Let's go back. Let's look at the headwind long, and I saw Pfizer, PFE. Why don't we look at that? Pfizer. Pfizer has a bullish headwind. However, the weekly is not meeting the requirements for taking a long trade. So I will not take it. Not using daily, weekly chart. Not as a swing trade today. Tomorrow I might keep an eye on it using the fine-tuned chart. But there is no trade setup as of today. That was Pfizer. Let's try 2-3 stocks. ABBV. ABBV has no trade setup. Let's look at LE Financial. This has a big move up and it has a possible box and go with flow setup. Extreme activity. Let's look at ALLY. It was coming down. It broke out of the memory resistance today, but the candle is very indecisive. Activity is very high. Let's check the news. When they say why it is trending higher today, I don't look at it. I just wanted to see if there is any earnings or not. You may look at the news later. Coming back to the at a glance chart, when the daily candle is looking indecisive like this, I don't take the entry today. Tomorrow I may keep an eye on it, and again using fine-tune chart, if it gives me a very low risk entry opportunity, I may take that. But before that, let me check its industry and fundamentals. Starting with fundamentals, ALLY. If it is 4-digit symbol, usually the suffix for definitive is .o. No. Okay, usually doesn't mean always. ALLY.k. ALLY.k. By the way, that is why I keep icon running so I can look up the symbol quickly. LE in consumer finance. Let's check its industry. Industry in QH. Sorry. Click the cog icon. Okay, the industry is allowing me to take a long trade. It was relatively weaker, you may say, earlier and strengthening now. If you look at the industry percentage, it is positive today. Earlier it was negative, before that it was positive, and the stock is breaking out. That movement is mirroring the industry movement. And we look at the scorecard, undervalued stock. So that is good enough reason for me to look for a buy setup. Though the earnings growth is negative and reducing, but still it is undervalued and technically it is going up. And today 79% of the stocks in the consumer finance industry, that has 34 stocks that are up. Next earnings 16th July. So maybe there can be a quick long trade opportunity, but the entry may be taken tomorrow using fine-tuned chart, not today. Okay, now let's spend some time. I'm going to not look at the other stocks on Q Sonar on Q Elite. The scans were completed. So let's look at Q Finder. Q Finder makes it easier to look at the market and then drill down to stocks. So I'm at the bearish tab, got the data. The bullish scan is also complete. Copy all. You can close that. Go to Q Finder, bullish, download the data. And first thing we do is look at the home. And Q edge is showing more bullishness than bearishness, and that is in Finder also. 57% of all the symbols are having bullish Q signals. 58% of all the signals, Q signals, are bullish today. Initially, it was bearish. There are large number of gap downs relative to gap ups, many more gap downs, but also there are many more bullish reversals. So it started lower but reversed up. The exact opposite happened few days earlier. Started higher but gap down. Gap open, gapped, gap higher at the open but reverse down, and today is the opposite, gap down at the open and reverse. Many stocks touched memory support, that is good, and several of them bounced also. When a large number of stocks are touching memory support and coming up, maybe we can look at the stocks that are bouncing up. If you look at the continuation signals, the picture is mixed, but the reversal signals are more bullish. So let's look for reversal trades then. Look for bounce, which is a superset of touch. Some more conditions are there, and if the bounce happen to be with headwind and box, that's even better. Let's look for them. Bullish trades today, look for the bounce. There is no headwind, but there are two box. Okay, so let's make sure we are on the chart application. Open both of them using Q entry daily chart. This is looking good. See, I looked at stocks using Q inside, didn't find any interesting stock. I looked at it using Q elite sonar radar on trace station, but didn't find an interesting stock. But in Q Finder, it has a very unique way of looking at the whole market from the graph or chart first. Decide what we are going to look for. What is our focus today? Not randomly look for trend following trade or something like that. Look at what the market is doing, that gap down and reversal. Reversals are much more bullish. Why not look for extreme low buy points using bound setup, and we'll be happier if they also happen to have box or headwind. And we found two stocks, and the very first one, RHI, giving to my eyes a possible buy point. It is also kind of pullback setup where it is in an uptrend. It is in an uptrend. There is higher high, higher low, then pull back to support and went up today. The candle is not cyan yet, so it's not a go with flow long setup. And when the pullback is so deep, I don't expect a cyan flow immediately. Instead, I might consider buying it as a bounce from the memory setup. And it had extreme high activity yesterday. If it closes above yesterday's close, then it will match all the checklist conditions for a bounce long trade setup. Let's look at the other stock. This is similar, but it has a memory resistance closer than the first stock. So to my eyes, RHI is looking better. Let's look at its fundamentals. RHI, human resources. Let's check out its industry using the Q Edge scorecard by clicking the cog icon. And instantly I see that it was weaker earlier for a long time, actually tried to strengthen a little bit here, and today it gained strength considerably. Not one of the strongest yet, but gained strength. And this pattern is again somewhat reflecting how the stock moved. The stock pulled back and now going up. So industry was also weak, and today it is relatively stronger. Not the strongest, but relatively stronger. What about the fundamentals? Okay, good news there. Again, it is an undervalued stock. Earnings growth is negative, but that is fine. We have undervaluation, and 75% of peer stocks are up today. So this could be a buy setup today. Let's now check it out using the at a glance weekly daily template. The weekly is neutral. If one is buying the stock today before market close, the stop will be very close. Let's check its options. RHI. Are options liquid enough? And let me delete all the symbols from radar to save my bandwidth. Open the option station pro interest station. Let's look at the option chain for RHI. Currently it is 50 and it is narrow spread enough. Put side 2 to 220 and call side 220 to 40. 220 to 40, not the best. If somebody gets a mid price fill, maybe there is an opportunity to take the trade using short put vertical. Though personally I suggest traders not to use options in the beginning unless one is able to make profit trading stocks for at least 6 months, 1 year. Then one may start trading options, but usually people also don't listen to me, and it's not my account anyway. Let's look at Q edge again. Yes, the market is certainly looking more bearish. Sorry, more bullish. And that is the nice thing about keeping Q edge running in real time. We can see what is happening and make our trading decisions. We found a bullish trade candidate today, and it's about 30 minutes before market close. The market seems favorable to that today. Tomorrow may be a different thing. Let's look at the market ETFs once more before closing, see how they are ending. SPY, very beautifully, it is closing above the memory support. Remember, that is why I mentioned I am not bearish. These memories work very, very well. Dia is at the memory support. IWM regaining the memory support, and QQQ very nicely bounced from the memory support. Always good to keep an eye on Q edge and memory support and trade with them. We are almost at the 1 hour point, so let me end today's session here. Thank you for attending. I look forward to seeing you again in our next session. Thank you very much for attending. I appreciate that. Have a great week and trade profitably. As I say, no reason not to do that. See you again. Bye bye.